Hello, traders. It is Wednesday, the 21st of November, 2018. Thanks for joining us all yet again. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Hopefully, you can hear me loud and clear. I'm on a laptop again. Major data issues this morning, mostly resolved. One thing to note, the levels on my charts are going to be off. The stock zone levels as well as the master levels. Those folks who are in convergent trading, just remember your stock zones and so forth will be adjusted before the open, so you have some good levels to trade off of if you use them as references. Of course, as always, trade your own plan. This morning, we have a pop in crude. Crude is just taking an absolute pummeling yesterday. Crude currently trading at 54.38, up 97 cents, about 1.8%. The Nasdaq's having a nice pop, up 76 points, 1.17%. The DAX is up 1% at 111 points, and the Euro stocks are up 25%, 25 basis points, 25 points, and 80 basis points. The laggard today are the safety assets. It looks like today risk is on, and for the Nasdaq and the DAX and a couple other products, it's on quite well. It's a moderate risk on, and so that's the stance we're coming in with this morning. Looking at the calendar as far as what is likely to play today, we have looks like existing home sales at 10 o'clock for October, but I don't know if that's correct. University of Michigan final and leading index all at 10 o'clock. So there's a slew of numbers. There are three distinct numbers at 10 o'clock Eastern today. I want to take a moment right now to just remind everybody that today is Wednesday, the day before Thanksgiving. Schools are out here in Chicago. My teen kids are still snoring away. And also that this is the busiest travel day of the year. A lot of people are going to hit the road or the airport early today. I'm expecting the session to kind of slow down very, very quickly, potentially by 10:30 Central, 11:30 Eastern. So I'm not expecting too much. Tomorrow we are off here in the U.S. It's a holiday, everything's closed, and then Friday, where the U.S. is open, but most businesses really don't work on Black Friday. And so I will not be here. So today we have our Trader Bite. Thursday, tomorrow we will not have one, and on Friday we will not have one. I will be watching the markets on Friday, but I will not be at my usual workstation. I'll just be monitoring on my laptop. The other thing I wanted to mention is it is Thanksgiving, and I'm not going to get on a soapbox here, but I just want to relay this message to everybody that gratitude is the giver of all things. Being thankful and remembering how fortunate we are is so important to humbling our greed and humbling our negative thoughts. So I want to take a moment to say thank you to all of you for following along. I think the Trader Bites is going, the Trader Bite is the first broadcast of its kind, pre-market live with a review of the prior session, very transparent from the time I started doing these about 5-6 years ago. So there are probably 2,500 of these or 2,000 of these videos, day in, day out. And I've had a lot of people come on live, and generally about 1,000 or 1,200 views a day. And I hope my goal with this is to impact those who seek to be traders on some level, either professional career traders or those who are doing it in addition to their job. So I want to say thank you for following along, for participating, and for those of you who are a part of Convergent Trading, thank you for your support there. We're growing very, very quickly, and we're building for the benefit of all. So that's what I had. Just remember to be thankful. We are very fortunate. If you've ever volunteered at a hospital or a shelter, you pick up a sense of gratitude very quickly, and I do so quite often with my charity and with my kids. So just remember to be thankful. So moving on. Looking at, let's review what we expected yesterday versus what we got as part of our process here. Yesterday, the primary scenario is for a pop-up towards 2666, and I was looking for an impulse down. I expected the range to remain open, as you see on this screen in front of you. So I was follow the green. I guess green is money too, but expected this to remain open, which it did. Was looking for an impulse down, and I was targeting 2626. I expected a pause, a strong pause here. Remember this confluence level and this confluence area here. Those two areas are expected to be difficult areas for the market to push through. And that's basically what we saw. We never really broke down into 2626. And remember, the extended target, now that we've moved below the 2700, is actually 2603. And so as we stood yesterday, we never had this drop on the close, but overall, we played out scenario one pretty well. Pretty good bounces off of the confluence areas. Again, the stock zones shown on these charts, the gray areas here, have not been updated yet due to some issues with data this morning. But if you look at how yesterday played out, let me turn off the zigzags. We had an open auction fairly quickly, 2649.75 to 2655.75. We broke into the next stock zone up, which is 2659.75, 2660. We had a response down into 2646 and 2640, pop back up, and then we finally pushed through into this double confluence area. This is, again, an important area here, and we received a nice pop, really beautiful push higher of 9.5 points plus. And unfortunately, I traded this incredibly poorly. I posted this trade at Convergent and was stating how much of a turd that trade was. It was just very, very poorly executed. It was well executed. It just didn't work. It just didn't work. It had I got in too early, and I had to abide by my risk rules. So we finally expand and push into a range extension up, pull back into the mid, the OS low, push again, and we finally get to that 2672 area, and then we start to drift down again, and we become neutral later in the session. We finish in the middle, so normal neutral on the day, and with the point of control slightly below the mid and VWAP. Point of control moved around a lot. One thing you might notice about yesterday's profile is how blunt it is. And that plays in line. Well, that plays in line with what's on the composite. Remember, I talked quite a bit yesterday about the composite, the fact that there's a pretty flat, boxy composite zone in this area. Tells us that there's likely to be a two-way fight up and down these prices, and we expect this to continue. And we saw a lot of that yesterday, where we drop, pop really hard, then drop, pop, then drop quickly, then pop up, grind up, and so on and so forth. It's a contested area, and so we ultimately end up with a profile that's had many different points of control throughout the shift in the VPOC was quite frequent yesterday. And so the reason for that is, again, same valuation or the same expectation in this area as in the past, that this area is likely to be contested. So yesterday, 2650, this stock zone right here was just tremendous. I mean, it pushed through it here and there, but boy, did they have a hard time staying above this price yesterday. And we broke through there overnight. The overnight low was basically at yesterday's low, and essentially the overnight session was the same as the day session. And what we have is a market that's above that 2650. So I expect this morning, the 2650, to act as support initially as we come in. But to yesterday's action, we left the gap zone open, so we mark that with this gray zone on your master levels, and we ended up with a neutral day with the down with a neutral down later in the session and finishing below the point of control mid and VWAP. Looked weak yesterday. It looked like it is likely to continue lower into the overnight session, but that didn't happen. Now again, there's a lot of influence from external factors. There's just a ton of just chatter and news, and it's pretty insane. Um, and those of you who didn't catch what happened in crude yesterday had just a massive move, really an extremely rare move down. Crude is down over 30% from the recent highs. Crude clearly in a bear market, unable to find any footing at all. And couple that with the OPEC news, they're doing their best to try to prop up crude prices by raising expectations for a supply crunch, for a reduction in supply by OPEC. But it seems like participants in there are not believing that and are selling the product. So crude is getting hammered. Here's what happened overnight. Overnight, we have what we would classify as a P-shaped profile. The market has moved away and has rejected lower prices, the lower end of the range, and has put in a stem at the bottom and has found balance in the upper range. So where we are is essentially where we were at the end of yesterday's Globex session that we started the trade with. We're back in that range. If you look at the point of control of that Globex session and this one, they're pretty much perfectly in line. So we have probed below and are back up into this area. So note that where we stopped in the overnight session is just inside of yesterday's range. Yesterday's range stopped just inside of the low volume node, one of the key low volume nodes in the overnight session, and that's the next area up is expected to be at 2670. The next resistance up is 2670. The support below is 2650. Pretty straightforward market. We may see a fair amount of activity on the open. We also may see a fair amount of activity on Friday. I wouldn't put it past this market coming into this long weekend to make some important moves to square up before Thanksgiving, and I wouldn't put it past the participants on Friday. It's expected to be light. Volume's expected to be light on Friday. I wouldn't put it past them to push directionally. For the OT, the higher time frame, to push directionally into the weekend. So we'll see what that looks like, and that's why I plan to be on and monitoring. As far as what we're expecting for today, let's make an adjustment here. So we're currently trading at 2660. Right now, I'm expecting this to have an open auction in range We're opening in value. The value is valid from yesterday. I expect an open auction in range. I expect some responsive selling. Most of the inventory overnight is long. I expect it to fall towards 2650 and potentially push into 2646 for an impulse up to hold steady in this range and then to start working its way up the gap. Remember, 2670 is expected to give us a little bit of resistance on a first test, but don't be surprised if we're at 2680, which gives us about 34 points, which is about what the range is currently based on current volatility for scenario one. Scenario one bullish, looking again for this top to be taken out. The more, equally, the more opportunistic play is an open auction that tests higher and fails beyond 2670, impulses down, then we start to target 2650 and the point of control, consolidate in this area and fall through and retest the 36 from above to finish. So we end up with a higher high and we hold steady in the range. Now remember, the context of the current trade is that we're going into a holiday, so I'm not. My expectations are quite tempered. However, I've seen it where, um, you know, actually around Christmas when you expect it to be absolutely dead, I've seen it just rip. I think it was 2016 or something, 2016, maybe 2015, where we had these just tremendous moves when nobody was watching. So we are opening in range, probably in value. That's a big piece. That's a big piece of the puzzle for today, and so that's why I'm tempered my expectations. As always, there's going to likely be some sort of an open test drive scenario, up and down. We're in the upper end of the range from yesterday. Um, the upper range, end of the range yesterday. The third scenario is most likely going to be a test up, drive down, as we fail again to have buyers committed to hanging on. And if we have an impulse down, especially with high volume, we are likely to breach the low, which helps us move very quickly through 26 and makes us it takes us on our way down into 2603. 2603 is out of range for today, but there are many areas uh, above there to test. Likely scenario 3 is likely to take us into the 2600 teens before it finds support and we rest into the holiday. So those are the three key scenarios. As I've said before, the goal with these scenarios is not to complicate things. A lot of people just want some sort of a moving average or an indicator that they follow, and that's great. If it has an edge for you, go do that. I don't trade that way. I'm using these scenarios to hang on. I'm using these scenarios to keep myself in contact, in constant contact with the markets bias and what the market's narrative is, so that I'm not sitting here all day entering trades and taking them off for 6, 7 ticks or 2, 3 ticks. Once I take a trade, it is in a specific bias and I'm looking for specific targets, but all of it's managed using order flow. I'm always reading order flow and the price action to determine how it's behaving versus expectations for that scenario. So these scenarios are not just kind of a theoretical exercise. This is important to keep me in the trade. And remember, I've been doing this for 18 years, and I've been doing it this way for 13 out of those 18 years, and I have not changed. In that period, I have not changed how I approach the market. I change the tools a little bit here and there. I add a tool, take away a tool. But overall, my approach is the same. If you listen to the videos, when I first became a public, came out into the public in 2008, if you watch what I did there on futuretrader71.com and the video archive, there are tons and tons and tons of free videos there. You'll notice that it's the same process. Uh, 10 years, 12 years later. So it works for me. Hopefully, it's something you can incorporate into your plan. Good luck today. Have a wonderful Thanksgiving. Make sure you enjoy your time with your family or loved ones if you celebrate it. I'll catch you on Monday morning. Take care.